The pieces of paper in your pocket are actually nothing more than an illusion. Throughout history, empires have risen and fallen, and today, billions of people continue to believe in a shared agreement. But what if I told you that money does not truly exist and is merely a collective creation of the human imagination? The origin of money actually began with the concept of debt. In primitive societies, the barter system was used, but the main problem was that one side had to have a sheep while wanting bread, and the other side had to need a sheep at that exact moment. This made the system extremely inefficient. In 3000 BC in Mesopotamia, a solution was found. Debts were recorded on clay tablets. These written debt records were the first form of money in history. A tablet that said, "I owe you 3 chickens," was essentially functioning as the first real money. Welcome to History of Economy. We'll explore the deep connections between money, power, and history. And remember, nothing is as simple as it seems. Gold and silver added a new dimension to the evolution of money. But here an important question arises. Why was gold considered valuable? The answer is that everyone believed it was valuable. This shared belief is the foundation of money. In ancient times, kings and emperors stamped their portraits onto coins. This was not just a matter of ego, but also a symbol of trust. Anyone who saw the coin thought this represents the power of the king, and therefore it will be accepted. The revolutionary development of the Middle Ages began with the Medici family in Italy. Banking was born in the modern sense. People could now deposit money in one city and withdraw it in another instead of carrying heavy gold. This seemingly simple invention completely transformed world trade. But the real magic was this. Banks realized that not everyone would come to withdraw their money at the same time. So they kept only a portion of the money in the vault and lent the rest to others. This is where money began to multiply. 10 gold coins could create 100 gold coins worth of economic activity. This system is called fractional reserve banking, and it still works the same way today. In the 16th century, bonds emerged. States needed large sums of money to finance wars. They borrowed this money from the public and promised interest in return. Thus, a brand new investment tool was offered to the people. Bond markets became so powerful that over time they became more influential than some kings. If a state could not repay its debt, it became unable to borrow again. This was the moment when money appeared on the stage of history as a democratic power. The origins of stocks and exchanges go back to 17th century Holland. When the Dutch East India Company was founded, the ships and expeditions involved were so large that a single merchant could not bear all the risk. The solution was to share the risk. Hundreds of people contributed small amounts of capital, and when the ships returned with profit, this profit was shared. The first stocks were born this way. But then an interesting development occurred. People began selling their shares to others. Suddenly, these pieces of paper became tradable. People realized that the value of these papers was determined not by the real value of the ships, but by expectations about the future. The tulip mania was the first major speculative bubble in history. In 17th century Holland tulip bulbs became so valuable that a single bulb was sold for the price of a house. People bought them today thinking they would be more expensive tomorrow, until everyone decided to sell at the same time. Fortunes evaporated overnight. This event showed the psychological side of money. Value is not objective. It is subjective and depends on mass psychology. The insurance industry made risk management a direct part of money. In the 18th century, insurance companies were established against fire, death, and maritime accidents. The basic idea was simple. If thousands of people paid small premiums, large payments could be made to the few who suffered misfortune. Thus, risk became socialized. Mathematics and probability calculations became an essential part of money from that day on. The mortgage and real estate system offered people the opportunity to buy the house of the future with the income of today, which was revolutionary. At first, it seemed miraculous. A young family could become homeowners by paying small installments for 30 years. But the system became more complex over time. Banks packaged these mortgage loans and sold them to various investors. By 2008, the system collapsed because no one knew exactly what was inside the financial packages they held. Risks were hidden and trust disappeared. The result was an economic paralysis that spread across the entire world. The role of states is also critical. The authority to print money belongs to governments. Throughout history, many states have caused inflation by printing too much money. In Weimar Germany in the 1920s, people needed a wheelbarrow full of money to buy a loaf of bread. Money had lost its value because too much had been printed. This showed that the value of money depends on supply and demand. Central banks today try to manage this balance. With globalization, money completely surpassed national borders. Dollarization, the euro, and digital transfer systems allow money to travel across continents in seconds. An investor can now trade in Tokyo, New York, and London at the same time. It is this incredible speed and interconnectedness that explains why the 2008 crisis spread to the entire world within hours. A problem in a single country can now be felt globally within hours. Money is not a metal. It is a belief system. Throughout history, it evolved and changed, but remained the same at its core: an agreement based on shared trust. When this trust collapsed, empires fell. When this trust strengthened, civilizations rose. The numbers you see on your phone today are links in this thousands-year-old chain of trust. The power of money does not lie in its physical form, but in our collective insistence on accepting it. If this lit a light in your mind, subscribe. History holds the answers that make things easier. I'll show you.